Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with another weak session, or I would say rather a bad session. And the way the geopolitics overshadowed the global financial market is actually creating tremors not only specific to Wall Street but across the globe. So we have ended with one more week. So let us discuss about how to make ourselves prepare for the week ahead. So welcome to another session of USA Weekly Market Report series. So let us discuss about the important things that will impact the stock market or the Wall Street going forward, and let us discuss what impact the most going forward the Dow Jones, the Nasdaq and other commodities. So let's start the video, but before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. So as I scroll down this page, you will see everything is related to either geopolitics or China related news, or what are the impact that is happening across the global market because of China and Ukraine conflict. Apart from that, let us see what do we have here. We have something related to biotech or vaccine, and yeah, that's the most of it, because the only big figure or the news which is grabbing the world along with, or which is grappling the stock market, is this conflict. And the most important thing is the VIX. The VIX is not at all coming down, and in the last one and a half month we have seen a steady rise, and more than that, sustainability in VIX. Generally this kind of situations are not normal, and that is why we have seen the VIX is at a very high level but still sustaining. And with this we have a sharp rise in the price of the commodities. As you can see, Brent at $118 per barrel, and crude we have here is 115, natural gas 4.9. And you can see, if you're talking about gold, if you're talking about silver, if you're talking about copper, platinum, palladium, everything is moving higher. If you're talking about zinc, if you're talking about nickel, aluminium, everything is moving higher. So we are in an official commodity bull market. Now this creates an additional pressure because the inflation is bound to rise on the upside. And let me tell you, this is not specific to Wall Street or the US economy. And that is why, because import and export across the globe are very high, so it will create a different impact on different economies. Now, if you are an importing country, then obviously your bill are set to rise on the higher side. Everything which is dearer as of now compared to the upcoming prices, obviously you will see that the current price is dearer as compared to the price which you may see in the next 1 month or 3 months going forward. Also talking about the bonds are right now, they are, I would say, in a range. They are not moving very much, but they are still in a range. Now let's go and check it out. What's the closure of the market as far as the last Friday is concerned? So Dow Jones down by nearly 0.53 or 180 points. The Nasdaq was the biggest laggard, fallen more than 1.66% or 224 points. Gold is doing good. Oil, obviously, it's the king in commodity right now, and we will definitely see, because I've been telling this thing again and again that we are officially looking at the trajectory of 115. Now 115 is anyhow here in front of you, so we are moving ahead. Then 150 is also a possibility. Apart from that, the VIX is the one of the most crucial factor, and because of which you can see this very volatile moves even in a conservative index like Dow Jones. Apart from that, commodities are anyways higher. You can see 7%, 2.5%. Nothing is less than only soybean. Apart from soybean, this is an agri commodity, but most, if it is a non-agri commodity or commodity related with metal and energy, they are actually moving very sharply. Apart from that, if you are looking at treasury are a bit on the lower side, and then we have the USD, the dollar index, which is making the strong move. This is very strong indeed, and this is the move which one should look for, because dollar keeps on rising, which means that inflation is going to rise, and similar sort of actions we are expecting from the Fed. If it does not happen, and if the central bank resist, going forward or change their guard from increasing like 7 or 8 hikes to just 2 or 3 or 4 hikes, then it would be a problem, because this ongoing crisis, anyhow, we have seen it's not a change in stance, but at least the more hawkish now become a less hawkish kind of words we have seen used by the Fed chairperson. So this is something. So if you go with the press release, if you go with the announcement or the important point that have said by Jerome Powell, you can sense a change. The more hawkish is now only hawkish, if not less hawkish. So this is what we have here. So let's go and check it out, the important thing. And let me tell you, the commodity has disrupted, and because of which the prices are on the higher side, and it's going to stay. And previously we do not have this commodity inflation. Now, along with the general inflation, we have now the with the fiat currency inflation, now we have the commodity inflation. So it's a double spike, it's a double worry that we have in front of us. So let's quickly go and check out the chart of oil. So let's go and check it out. Crude. So crude futures, those who have purchased the oil in 2020, the commodity or long contracts, they are the one who are actually enjoying the most of the benefit. Now I would say because commodities, when they move, they are giving you more return in a very short amount of time when compared to even equity market. So if you are looking at WTI futures, we are at a very crucial juncture, I would say. Okay, the close, it's closed at $112, but the high that it has made was 116. And what do we have here? We have 115, which is your resistance, 114.87, which is your resistance. So the current range we have here in WTI crude future, it is in between 108 and 115. And once it started moving above 115, the highs of 2008 will definitely become a reality, where the WTI crude future moved, and we have seen the highs of $147, $148 per barrel. So this is what we have here as far as the crude. This is 147.5, so nearly $148. So this is going to be the new normal if it does not fall below 108, and once it started moving above 115. So things are not at all looking good. We have inflation in front of us. Apart from that, let's talk about copper. This is one commodity which I was looking, and there is a breakout. So it's a multi-year breakout that has happened. Okay, if you are looking at the overall chart of copper is something which has made a big as well as sharp move that we can see. So here we are. the actual or the big resistance we have here. So this was the resistance, and we can clearly see 4.66. Now it is again trading above 4.66, and more than that 4.8586 was the resistance, and the close that we have seen here was 4.93. so this is a multi-layered breakout that has happened. So we can see going forward a huge spike in the price of copper as well, so be ready for that. Now the next most important chart we have here is the dollar index, and dollar index has finally shown some very sharp up move, and the trend is clear now, at least for the time being, because there is a range in between which dollar index has been moving, and here we are. So the range in between which the dollar index have been moving, and so this is the upper end of the range, right? And because dollar index have started moving significantly above all the major support level, 97.51, then we have 94.92, 92.85, 89.65 and 88.64, right? So this is what we have as far as the lower end of the range is concerned. And now because dollar index has started trading above 97.51, the next three targets we have here are 100, 102 and then 104. So these are all the three important levels as of now, and if it moves beyond 104, 105, it would be a big problem for equity markets. Because let me tell you, if you think that the dollar index is beneficial for the equity market or the Wall Street, then this is a myth. Because the US economy also carries a huge amount of debt. If the debt is negligible or very low, then a strong currency would definitely give you the benefit. But a strong currency with huge amount of debt is always a problem for you as well, because you need to when you are issuing bonds, or when you are taking loans from some other countries, obviously you have to pay, and the amount is going to increase. So that's what it simply indicates. So equity market will definitely feel the pain going forward. Now, talking about equity market, let's talk about the two most important one, Dow Jones and Nasdaq. So talking about Nasdaq is definitely on the loose ground. So Nasdaq is going to feel the pain as the dollar index started moving higher, because it is highly sensitive and it is a high beta index. So definitely it will feel the pain. Now, if you are looking at dollar index, I am choosing the weekly chart because it will give me a clarity and you can understand what I'm actually saying and what I'm indicating right now. So looking at Nasdaq, there are a couple of important support level at or around which Nasdaq is currently trading, right? So this is what we have here. So these are your two very important levels. So you have 13,000 and you have 12,418. Right now it is very near to both these levels. But what's the indication over here? The indication here right now is that if you are looking at long-term indicators, they are, you're talking about weekly and most importantly the monthly one, they are indicating a trend breakdown, which means if there is a breakdown below 12,400, the big target or the big support which we are looking for Nasdaq at least is going to be your 200-day simple moving average in the weekly chart, which is nearly 10,424. So you may see a bounce back in the short term, but if you are looking at Nasdaq for the next couple of weeks or months, so there will be some big downside which is yet to be seen. So you need to prepare yourself in such a way that if you want to accumulate good stock, you can accumulate, but in the next 6 years, beg your pardon, in the next 6 months or 4 months. So you have to give yourself a bit of time, because this is going to be a slow grind on the downside. Now, talking about Dow Jones has or is sharing the same story, because if you are looking at the monthly chart, you can see the MACD is just turned negative. The stochastic RSI is also negative. So what do we have here is a negative trend indeed. And if you are looking at the chart of Dow Jones, the most important level what we are looking at here right now is I think 33,000. Okay, and once the Dow Jones slips below 33,000, you have 100-day moving average, which is 31,494, and 200-day simple moving average, which is at or near 28,895 in the weekly chart. So these are going to be your next two most important support levels. Now I'm talking about the possibilities in the next upcoming weeks and months. Right now, if there is a big downside, in that you can see uptrend as well. There will be a reversal before it again started falling down. So right now it is holding above 33,000, but once or if there is a slide down, which the indicators are showing us, then in that case you will have a retest of your 100-day and 200-day simple moving average in both Nasdaq as well as in Dow Jones. So the overall structure of the market is bearish, and as I've been telling you the same thing again and again, that if you want to go for a trade, then you should better look out something which you are very sure of, and do not forget to take the profit. Also, if you are going for making or creating a longer term portfolio, then it will be beneficial for you, but in short term things are not at all looking good, right? And let me tell you one thing, if you are looking only at the index, if you are looking only at index level, so from the lows of 2020 to the highs of 2021, the Dow Jones itself moved by 100%. So an index moved by 100%, actually it is moved more than 100%. So this is a very big thing, okay, in between which the stocks obviously moved or become doubled, tripled, quadrupled, nobody knows. So if it corrects 20 or 30%, this is not even, right now this is hardly 8% from the higher range or higher price. Okay, so whatever the high that has made, it is just 8%, although the low is 11%, but 8%. But even if Dow Jones goes back and test its 200-day simple moving average, then also it will merely be a correction of 20-22%. So we are not looking anything big or extraordinary, and the current situation in front of us, whether it is related with economy or geopolitics, has actually shaking the market more than normal. Otherwise you will definitely have a correction which is pending, but it's not going to be as volatile as it looks right now. So be very alert. If you are looking at the short term, it's not only about the next week but also about the next couple of weeks. So be very alert, because the trend is not yet broken, let me tell you, and the correction is not yet over right now. Once it's over, we'll get to know, because then the stock market will move in a very fast and rapid manner. So this is the end of the video. Thanks for